Welcome to Bears in Exile. Today is March 16th, Tuesday, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and the brain just stopped working there for a moment. And all the other ones that we look at every night. Okay. Today was a great bear day, as I'm sure everyone already knows. And the Dow more than 200 points to the downside. Wow, that was really impressive. Of course, everything's ticking down, 14-day, which we've been watching, and finally, we've been waiting for prices to catch up with the 14-day RSI moving average, and today was it. Getting down into long-term moving averages and closing below the major price consensus level and the lower price consensus level all in one go. Very impressive. And we do have a shot at complete crossover and separation prior to entering the bar, since there is some space left. It's all going to really depend on if it's going to be able to hold or even go lower tomorrow from where the price ended up today. So very interesting. If that ends up happening, then we should get in the area of 12,650 at least, but that's normally about the level of putting the hurt on the bar. Do I expect a cascade waterfall at this moment? Not really, but having it drift lower would be absolutely beautiful. SPX almost 21 points to the downside and closing below the major price consensus level today, doing its bar retest of the real body, and it's more important when the short-term moving averages get there. But anyways, just like the Dow, there is a chance that we could get full crossover and separation before entering the bar, but we'll be watching just like the Dow. Everything just drifting on lower. Very nice, very pretty. And so the question becomes, is this overdone at this moment? Well, the long-term moving average bar should offer some support, should try to catch it. In the case of the Dow, yes, we already have a decently deep penetration with the real-time price, but it's all about the moving averages. So we have yet to see them come into contact with the long-term moving averages, and that is what's important. The NASDAQ, very nice gap down, ending with a kind of a fat body spinning top, closing below the major price consensus level, above the upper price consensus level. Very nice, looking to get the cross of the middle Bollinger Band, which would definitely aid switching into a bearish mode. But I mean, this is really breaking away from the short-term moving averages. This is just one day, so that's something to keep in mind. And of course, just like all the other major indexes, everything trending on down. Most important, 14-day RSI moving average. The VIX, very pretty. And we almost had complete crossover and separation, but not quite. It was just too close. But what a magnificent gap up, forming a spinning top and getting above the very, very important, psychologically important, technically important $20 mark. And are we going to be able to bust the previous ceiling right at 22? Don't know yet. For today, already getting too overbought, and stochastics racing up to meet it. CCI very high, RSI climbing above the 50, up on the MACD, histogram up on the MACD. Very nice gap. Do I think that it could fill in? Yeah, I kind of think that it could, but it'd be great if it could just gap and go, but we will see. If it can just run away, I'd be very pleased. XOI, hammer, closing below the major price consensus level. We do have the complete cross of the middle Bollinger Band above the short-term moving averages. 14-day RSI moving average, lots and lots and lots of room to move to the downside. Stochastics racing on down along with the CCI, RSI, MACD, and MACD histogram. This one does look promising, and if we are going to have some kind of a breakdown, then we would be looking at the previous floor down here, just above or just below 1240. That would be beautiful. But we'll see. Oh, how funny. I totally missed this level. We have the previous floor right here. For some reason I was thinking that we had busted it, but nope, we haven't. So actually, this is a good area for it to be caught and coincides with the long-term moving averages. And TNA. Oh yeah, look at that. Now that is promising. Complete crossover prior to entering the bar, and it is putting the hurt on the bar bad. Had to test the 200-day moving average yesterday. That has broken. This is very attractive. Stochastics already very low. We want them to get locked to there. 14 days, still some room to move. Downtick on the CCI, down on the RSI, down on the MACD, down on the MACD histogram. Very promising indeed. And we've been posting trades. We did 3 trades of gathering TZA, which is the opposite of this, over the last week and a half. Those have been posted in real time in the forum and working out fabulous. XLF, the financials. Fat body spinning top, very pretty, and lots of room to move in the 14-day RSI moving average. Stochastics also on their way down along with everything else, along with most of the things today, getting below the lower price consensus level, which is very bearish, and we have not yet totally cleared the floor. UUP. Alrighty. We have a doji star here, and we have almost complete crossover prior to entering the bar, but not quite. This is very interesting because it is flat essentially on the day. Yeah, it had a huge gap up, but I mean the intraday price action just staying the same really. We do have this previous high that needs to be taken out, 22.3, and lots of room to move on the 14-day RSI moving average. Hopefully everything can get stuck up high, everything moving on up, which is not surprising in a 200-point day. There is wobble in this, so when this move up is finished, we know that we're going to have a bubble, which is typical moving through the long-term moving averages. It's going to wait for that to happen, but we know that there'll be some weirdness when this is complete. FXE, also very small range, nice gap below the major price consensus level, staying, kissing, and being right above the major price consensus level for the previous month. 14-day, all kinds of room to move, and everything moving down, which is the way that it should be. The VIX. We were talking the last few nights that we weren't pleased with the VIX's movement in comparisons to the down moves in the averages, and that fixed itself today. We do have penetration by the short-term moving averages. We did end with a spinning top. The only bad thing is 14 days are getting high. Hopefully it can get stuck there and everything moving up the way that it should be. So really not bad, but sure would have been much better if this would have been all the way at the bottom and just starting its move up. But hey, it can get stuck up there for a week or two or however long it wants to, so not the end of the world. And oil. Yeah, look at that. That completely makes sense. It's exactly what should happen. Oil is bearish, the market is bearish. Nice move down, ending with a hammer, ending below the major price consensus level. We do have the cross of the middle Bollinger Band and all kinds of room to move to the downside. Apple. That's not Apple. There's Apple. Not nearly as much as everything else, but we noted last night that we had the downtick, and the downtick was close, but it was not resolved. Boom. Today it was. Notice also how it opened right at the downtick target. Very interesting. And moved up from there for the rest of the day. Another downtick on the 14-day RSI moving average. So technically this one should have plenty of room to move to the downside. You'll see the stochastics are pointing down. The CCI, the RSI, bearish cross, on the MACD, which we were talking about last night, and down on the MACD histogram. Very nice. And I think tomorrow is the iPad 3 announcement, so hopefully we'll get some more down move after that, unless it's just a, fantastically stellar product, which it's probably going to be one of Steve Jobs' last, so there's the possibility that it will be. GE getting a forewarning of the Dow. And we had a very nice move down. 14 days still, some room to move, but not excessive. Stochastics very low, CCI low, RSI heading down, histogram down, MACD down. I am not sure how far this one can go before it's going to want to turn around, if it's going to be a test of the 200-day moving average, or if we're going to get slightly below it and then get sucked back into the bar. Those would be that would be the most likely scenario at this point, in my opinion. But a waterfall at this point would be more than welcome. GLD, the second VIX, yep, it gapped down below the 200-day moving average, and went back up to test it. Interesting how we talked about the push-pull between the dollar, between fear. The VIX was green today, green candle. Gold was a green candle today, even though it was a gap down. So I do think that those two are correlated. We still have the 14-day moving down, though. So I have to wait for that to turn around, and then it'll probably be pretty nice. It is somewhat unfortunate that it did its gap down, because we were talking about needing the 14-day to get to its bottom and turn around, and hopefully prices would stay put as much as they could, and not exactly the greatest move in those regards today. SLV, same thing. Nothing really to add beyond what gold already looks like. It's a small spinning top, and not as great a move, but anyways. And that's about it. A really good day. We don't know yet if there's going to be follow through. There should be, based upon the indicators. And but we should also have some resistance because of everything coming into contact with the long-term moving average bar. And that's it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.